Gentleman is recognized.
Mr. Speaker, before proceeding to the bill before us on the House, not unlike yourself, I am a proud Texan, in my case, a fifth-generation Texan, and listening very carefully to the gentleman from Texas, Judge Poe, I do wish to remind all my colleagues that it was this day in 1836 that brave men in Texas took on the minions of tyranny at the Alamo. And although they lost that battle, they inspired their nation at the time, Texas, that would later become part of our nation. And so on this day that is special to all Texans and should be special to all Americans, we remember the cradle of liberty, remember the Alamo. God bless Texas. Mr. Speaker, otherwise, I rise also today in support of H.R. 4607, which is a very important piece of legislation brought to us by a very hardworking member of the Financial Services Committee, Mr. Loudermilk of Georgia. It is a bill that helps address the burden of unnecessary, duplicative, and outdated regulations that too often have imposed cost on our community financial institutions that ultimately make credit more expensive and less available to our constituents. It passed out of our committee with a very strong bipartisan vote of 38-17, and I congratulate him for his bill. Specifically, Mr. Speaker, this bill requires that all of the prudential financial regulators that now include the CFPB and the NCUA, the National Credit Union Association, it ensures that all of our financial regulators, not just some, but all will participate in the Economic Growth and Regulatory Paperwork Reduction Act, known as AGRIPA, a law that dates back to the Clinton era. And this ensures that our agencies review rules that are prescribed by themselves that impact our insured financial institutions. The purpose of this review, again, is to reduce regulation that is proven overly burdensome, duplicative, or outdated while maintaining our safety and soundness standards. And again, Mr. Speaker, all this is a review. It ensures a review. Additionally, H.R. 4607 will require that these agencies meet every 7 years for a comprehensive regulatory evaluation as opposed to the current 10-year standard. This is especially important, and I salute the gentleman from Georgia for his leadership, because we have seen our financial sector of the economy suffer under the weight, the load, the burden of regulation, particularly because 6 of the 7 heaviest regulatory years occurred under the last administration. So we need a more thorough review of these regulations. And requiring our federal agencies to simply review their actions in a transparent manner on a more frequent basis, it's simple, it's fair, it's straightforward, it is wise. Mr. Speaker, a healthy financial system that provides equal opportunity to all Americans to achieve financial independence can only exist if we have smart regulation. And the explosive growth of regulation following the enactment of Dodd-Frank has made it significantly harder for our community banks and credit unions to serve their customers and members. And in fact, the complexity and cost of this regulatory burden has forced many of them out of business or has forced them to cut back services to their customers and members. And it's one of the reasons why, on average, we continue to lose one community bank or credit union a day or every other day in America. This should not be happening. But ultimately, Mr. Speaker, it's not the banks and credit unions we're so concerned about, it's their customers. It's customers like Missouri mom Michelle, who explained to us how frustrating it has been for her 20-year-old daughter with a full-time job to get a loan to buy her first car. And again, her daughter has a first-time job. And as Michelle explained to us, quote, it's a catch-22. You need credit to get credit, but no one will give you the credit to begin with. I would like to see our young adults be able to build the credit they need so they can have a decent future. Mr. Speaker, It's for people like Michelle and her daughter that we need this regulatory review. It's why we need the bill from the gentleman from Georgia. These are the people we're trying to help. Or like Ann in Wisconsin, who was trying to get a loan to remodel her attached garage when her son was born. And she said, quote, "My husband and I have very high credit scores, and we have equity in our home. But because my husband has a seasonal job and finds other employment in the winter, the many banks we contacted rejected our loan request. They based that on our annual income only on the job he was currently in and said it was part of the new regulation." Well, of course it is, Mr. Speaker. That's why they need to be reviewed. It's people like Ann in Wisconsin we need to help. Or Dan, a Navy veteran from Illinois, who actually had to close down the small auto finance company he started with his wife 25 years ago. And he had to close it down because of new federal regulation. He explains, quote, "Large companies can afford a separate legal department to deal with these issues and the myriad of new regulations. A small business like ours cannot. We had to make a decision. It was just not worth the risk to continue operations in this anti-business environment," unquote. So, Mr. Speaker, it's people like Michelle, it's people like Ann, it's people like Dan who deserve the opportunity to have credit for their homes, their autos, their small businesses. And so we must ensure that all of our federal regulators, all of our federal financial regulators, take a thorough, comprehensive review of their regulatory burden so that we can continue to support the people who need credit. H.R. 4607, again, has garnered strong bipartisan support. It is practical, it is common sense, and I urge all of my colleagues to adopt it. And